Welcome to Alpha Insights. I'm Tony. Today we're digging into a few market stories making headlines: Venezuela's sovereign bonds, and an alleged Bitcoin stash, a softer manufacturing read, and some industry moves from energy to autos. With me is Shani, a risk management specialist. Shani, great to have you.
Thanks for having me, Tony. Happy to walk through what this all means for investors.
Let's start with the biggest splash: Venezuelan bonds suddenly showing up as a hot trade. What's behind that rush?
Investors are hunting yield, and Venezuelan debt is cheap on paper because it's been frozen by politics, sanctions, and legal fights for years. The catalyst now is talk of political change and clearer paths to recover frozen assets. That creates the possibility of big gains if creditors can get paid. But the trade is not just about upside. It's laden with geopolitical risk, complicated legal claims, and the uncertainty of enforcement. That means prices can swing wildly on rumors or small political moves.
Media reports also say Venezuela may have a sizable Bitcoin reserve. How does that change the picture?
Guessed. If Venezuela really holds a large amount of Bitcoin, it adds a whole new dimension. Crypto assets are harder to trace and seize than bank accounts, and selling a large stash could put pressure on the Bitcoin market. For creditors, it raises custody and valuation questions. Who controls the keys? How do you value an asset that swings a lot? And how do you legally claim it? In short, it could either help creditors recover more, or it could complicate and delay recoveries, and create volatility in crypto markets.
So, for a typical investor, what's the practical advice on Venezuelan debt or exposure tied to those stories?
Treat it as speculative. Size positions small, expect wild swings, and only invest money you can afford to lose. Use managers or funds with legal expertise in sovereign claims if you want exposure. This isn't a DIY trade for most retail investors. And watch for official disclosures from governments or courts. Those are the real market movers here, not hearsay.
Switching gears, S&P Global's manufacturing survey showed a slowdown in December. How should investors read that?
The manufacturing survey is a timely gauge of factory activity. A softer reading suggests industrial demand is losing momentum as we head into the new year. For investors, that matters because industrial companies, suppliers, and commodity-linked names tend to be cyclical. Their earnings are sensitive to factory orders and capital spending. If the soft trend persists, you could see pressure in those sectors and a rotation into more defensive areas.
Does that change the Fed outlook at all?
It adds nuance. The Fed watches a broad set of data, including inflation and employment. Cooler manufacturing doesn't directly translate to Fed action, but if it becomes a trend alongside moderating inflation and weaker hiring, it could influence expectations. Investors should watch the next inflation prints and payrolls closely.
On the corporate front, CTRA Energy presented at a big conference, and Tesla slipped amid renewed talk of competition from Nvidia. What should investors keep an eye on there?
Conference presentations like CTRA's are where management lays out strategy, production plans, and capital allocation. Those details can force analysts to update models and cause short-term volatility. For income-oriented investors, focus on production guidance and free cash flow. With Tesla, the competitive angle is more about tech ecosystems. NVIDIA is building chips and software that feed into autonomous systems, while Tesla emphasizes an integrated approach. For investors, it's about execution versus hype. Watch product announcements, partnerships, and demonstrable progress rather than just statements.
Memory and storage names rallied too. Is that part of a broader trend?
Yes, memory and storage saw momentum carry over from late last year. Demand for data storage remains strong, but these cycles can peak quickly. If you're trading this sector, look at inventory levels, end market demand like data centers, and pricing trends. Don't chase a fast run without confirming the fundamentals.
A few other movers were flagged: Johnson Controls, TransUnion, SoFi, and AIG. Anything investors should note about these kinds of intraday movers?
Intraday movers often reflect news, positioning shifts, or low liquidity. For most investors, these are trading opportunities for nimble traders, not signals to overhaul a long-term portfolio. If you own these names, check the underlying driver, earnings, guidance changes, or analyst notes, and avoid knee-jerk reactions.
Lastly, there's mention of an index provider review that could affect passive flows. How big a deal is that?
Index rebalances can be surprisingly impactful for smaller and mid-cap stocks. When a big index adds or removes a company, funds that track the index must buy or sell, which can move prices substantially. For investors in affected names, be mindful around review windows and understand that changes can create temporary liquidity pressure or opportunity.
Okay, Shawnee, to wrap up, what should listeners be watching right now and any final advice?
Watch for official political developments in Venezuela and any disclosures about assets, including Bitcoin. Track upcoming U.S. economic data, inflation, and payrolls to gauge cyclical health and Fed expectations. And on company-specific news, read conference takeaways and product announcements before adjusting exposure. Above all, manage position size and know the legal and execution risks in complex sovereign or crypto-related plays.
Great perspective. Thanks, Shawnee. And for our listeners, here are 3 quick takeaways.
First, Venezuelan debt is a high-reward, high-risk trade, only for those who understand legal and geopolitical complexity. Second, reports of a large Bitcoin stash add crypto risk and could affect both recovery scenarios and the Bitcoin market. Third, softer manufacturing momentum adds pressure on cyclical sectors. Monitor economic prints and company-level updates before making big moves.
Thanks again, Shawnee. That's Alpha Insights. I'm Tony. Stay cautious, follow the facts, and we'll see you next time.